Good morning, good evening, depending on where you are. My name is Romain Danielou. I am the co-founder of LandQuire, and today I am happy to present you our last opportunity of the year, our LQPF18, which stands for LandQuire Portfolio 18, which is located in Brownsville. The proper address is 281 Torres Road in Brownsville, Texas. This is the further south that you can go in the United States in order to acquire land. And this parcel is a 40-acre parcel that we're going to subdivide in 299 lots for a mix of MH, which is manufactured home lots, single wide, double wide, and also RV. We have 2 points of access. The road is flat. The topography is flat. We have water and sewer at the road, and we're located within city limits. What you can see on the screen here on the left is the first pre-conceptual that we received from our engineering team called LGA. Feel free to go on their website, lga.com. We work on a lot of different projects in Texas with them. What you can see here on this map is where the property is located. So Brownsville is in the Gulf of Mexico or Gulf of the United States, depending on how you want to call it. Here at the top, I wanted to give you a real picture of the golf course that is located right here. That's that picture. And here we have the brand new high school that was built right next to our property. Our property is right here in the red triangle here. That's a 40-acre parcel. We're going to do the proper density in order to achieve 299 lots. We have pre-conceptual done. We have the pre-application meeting, water studies and sewer studies on the way. We are raising the capital the entire month of December. There's 2.6 million roughly to raise, and we will be doing the closing of that parcel roughly in January. We have 35 investors that can potentially join this opportunity. Disclaimer, like any other investment, there is risk. We're talking about investing in private equity. You're buying shares into an entity. These shares are illiquid. These shares have risk of non-performance, of potentially losing capital. I want to emphasize to have you read the disclaimer and understand fully what you're getting yourself into. Like any other presentation, we have a full data room that you can directly click here on the presentation. We have the pro forma, we have the Google map, the construction plans, and the task planner. Today, we're going to talk about the market opportunity, the team behind the project overview, and the financials. So again, we're talking about a 40-acre parcel in Brownsville, Texas to develop and resell once we are fully entitled, right? So this is a niche business that we've developed over the last 5 years where we cater to national and regional builders once we fully entitled parcels, so we can save them time and efforts and reduce the risk for them because we do all the work in terms of the feasibility study and all 30 steps that constitute the entitlements. The minimum investment here is $100,000. For you as an investor, you would be receiving shares, preferred share actually in the entity that is LQ Investment Portfolio 18 that will be buying the land. This is a specific purpose-built entity in order to run this operation. As an investor, you would receive a preferred return of 10%, and on top of that, anywhere between 55 to 70% of the profit above the pref return. The resale horizon is anywhere between 24 to 36 months. We have a track record to back this up based on what we've already achieved over the last 5 years. And the target IRR is anywhere between 21% up to 35%. A little bit about LandQuire for people that don't know who we are. We created the company with my partner, Thibaut Guéant, which is the CIO. I'm the COO of the company. We started the company in 2021. We achieved 145 land flips. We raised just above $36 million of equity for this project. Just above 400 investors joined the platform. We have a historical IRR of 22%, and durations of resale varies anywhere between 24 to 36 months. We do have some land parcels that sells in 1 year, and we also do have land parcels that sells in 4 years. Again, what is the beauty about land as a diversification and alternative investment is that land, to my opinion, is the best store of value ever invented. The time is with us because we are not creating any more land. And as long as you're able to buy on the path of development, where there is a growth in demographics, a growth in infrastructure, and the housing needs are sustained, then you have a natural appreciation of the land that, based on data, is anywhere between 7 to 8% per year. Once on top of that, you have a full pipeline of undervalued, underappreciated, and off-market land deals, and you can acquire at a discount. And on top of that, you can force the appreciation of the land through a fully built-in entitlement model that we have. Then you basically have a perfect investment, to my opinion. You buy at a discount, you can force the appreciation of the asset, and the time is with you. If you don't find liquidity on the time frame that you want, it's not like buying a car where it depreciates over time, right? Land appreciates over time, and it's very safe in terms of liabilities as real estate, right? If you buy an apartment complex, if you buy commercial, industrial, you can always have people that can have problem on that property. It's really hard to actually have problem on the piece of land, whether you have tornadoes, if you have flooding, if you have fires. Land is dirt, and dirt is meant to be staying there. It's not going to move. And that's why we really like to focus on land, because the property management is much easier, insurance are much cheaper, and it's a niche business. Not a lot of people understand how to buy land and how to run feasibility studies. So that's LandQuire in a nutshell. Now, why are we buying right now in United States? Because there's a deficit of 2.3 to 6.5 million homes. There is a structural insufficiency of supply, and we will need anywhere between 3 to 4 years to get back to even supply and demand. Okay, and the beauty about Texas is that there's numerous underutilized plots located in high demand residential areas offering a strong development opportunity. And that's the case what I'm going to present to you today. Now, Texas has a population that increase on average anywhere between 1.5 to 1.9% per year, which is phenomenal. It's a business-friendly state that is pro-development and that has a pretty steep increase in terms of demographics. On top of that, we have a GDP performance that is growing anywhere between 3.8 to 4.7% per year, which is on the high side compared to all other states in the US. The Texas is also investing over $7 billion already in connectivity and mobility projects. And last, we also have a median home price that has increased over the last 5 years from $260,000 to $320,000. For people that live in California and Florida or New York, you may be aware that $320,000 for a median home price is pretty low compared to other states where people cannot afford to live anymore. Now, focusing a little bit more in terms of Brownsville. For people that don't know Brownsville is projected to have approximately 193,000 people resident in 2025, which is a steady increase over the last decade. There is real estate growth that is driven from the port of Brownsville and SpaceX, as well as over 770 acres of new industrial developments that are underway. Land is still affordable. We're looking at roughly 15% lower than the national average in terms of the cost of living and also in terms of the land cost. And we have a fast-growing economy. And it's materialized by $12 billion in activity through the port of Brownsville in 2023. It's just to give you an idea of how much income they generate just from the port. On top of that, obviously, we have aerospace, we have logistics, we have manufacturing, we have energy. All those industries are really building the future of Brownsville. So the reason to invest in the property that I'm showing you on the right end of the screen today. Again, we'll go over the numbers, we'll go over the details about the parcel, but first, we have to recognize that we have a strategic timing because we're before the potential boom that will be happen in Brownsville due to all the potential companies moving in and the obviously the investment in infrastructure and the increase in median home price and the cost of living. We have here a 40-acre parcel that is, and I will show you the comps, that is roughly 25% lower in terms of price per acre than any parcel that you would find on market at the moment. And again, feel free to go on LookNet, Zillow, look for 20 acre and above with sewer and water. My guess is that you're not going to find any parcel that are below 30,000 an acre. We are on the contract at 31,000 per acre for that specific parcel. Now, we will be optimizing the density for that 40-acre parcel into a 299 affordable lots for a mobile home park. The beauty about what we're doing is that the city has roughly 10 to 15 parks, and every single parks, you will see it in the data room, are above 95% in occupancy. We also have our neighbor that is a mobile home park, and our neighbor are actually renting their pads at over $1,000 per month, which is amazing because we're going to be competing against them, but at a much lower price. Obviously, they do have a golf course, but we're looking to sell it to a developer that will be priced anywhere between $600 to $650 a month for their lot rent. So there's really room, knowing that the neighbor is fully filled and occupied, and we're bringing a new product that is within 10 minutes of the city and downtown for people that want affordable housing. There's a clear exit process for that property. Why? Because there's strong demand from builders in the area that are looking to build potential mobile home parks. And again, we have connections already. We've been in the game for 5 years. We know how to dispose this property and how to properly build an offering memorandum to actually understand what a developer wants during the negotiations. They always want the same thing. They need to understand their bids, their OPCs, the construction cost, specifics about the plans, making sure that the engineering is done properly, a reasonable timeline for closing, a reasonable down payment. All these things are being managed by my disposition department, and they've been doing it over and over to work hands in hands for developers to make sure they can succeed once they buy the parcel from us. The summary of the operation: $100,000 minimum. We're talking about a preferential annual return of 10%. As an investor, on top of that, you get anywhere between 55 to 70% of the project profit above that. For that specific parcel, we're raising $2.69 million, which include every single fees, taxes, insurance, pre-acquisition fees, entitlement, engineering fees, the land. There's no leverage on that specific operation. That's the beauty about investing with LandQuire. The risk of actually losing capital is really minimal because we do not have leverage. We're not going to a bank to get a construction loan. We're not going to get seller financing. We're not getting a construction loan. We're buying the land outright at a discount, and we're just passing along the entitlement in a state that is pro-development, where we understand properly the zoning laws in order to get the density that we want. Again, we can never guarantee we're going to get 299 lots, but what I can guarantee you is that we do the full process in order to optimize what the city and the county will allow us to do. Based on my experience over the last 17 portfolio, we're always within 5% of the amount of lots that we present originally on the presentation. Now, I did a pre-conceptual with my team at 299 lots. We could go up to 320, 330 if we actually do a little bit more RV. We're still studying the market to see how many RVs we would be doing, because again, it's a seasonal market with a lot of snowbird that come down. to spend 6 months out of the year in their RV. So I do think we will be adding a couple RVs to maximize density and to obviously maximize the potential cash flow for the builders once we sell them the project fully entitled. We're looking to exit at $18,000 per paper lot, which is roughly $5.38 million of gross resale value. And on top, you would obviously deduct the brokerage and the title company and disposition costs from that $5.38 million. So now, a little bit about myself. It might be a little bit late because some of you already know me. I have a computer science background. I've been in real estate since I was a kid. My grandparents and parents are farmers in Europe. And I loved land since inception. That's the only asset class that actually my family made a little bit of money on. And that's really, as a store of value, adding the open data that we have available in the US allow us to get deals like this. Why? Because in Brownsville, for example, we sent 5,000 offers for that specific market to get that specific deal. So our pipeline is really, really wide in order to get the type of opportunities that we're showing you today on the webinar. My partner, Thibaut Guéant, is someone that has been a real estate investor as well for the last, I believe, 12 years in the US, and has done over 200 property management and 200 property flips for his clients and for himself. And he's focusing more on the investor relations. I'm focusing more on the operations of the land side. And we do a perfect duo. On top of that, we also have 35 people full-time that help us to build a perfect service, a turnkey land investment service for you as an investor. The management team, so please feel free to connect with them on LinkedIn. The main important people that act on your behalf for your investment on the land side is really Willem van Biesen as the head of acquisition and head of entitlement, and Christopher Garcia, that is the head of disposition. We have Edouard Brun, that is our CFO, and that is the one doing all the tax returns on all the SPVs and sending you the K1s for you to do your tax returns. Paul is our head of marketing. Mohamed is our head of data and cybersecurity. And then below that, we have, on top of Alexander, our head of investor relation, we have all our directors that will be happy to answer all your questions and follow up with you, not only before you invest, but also after you invest. There is a clear communication path that is established through our investment portal for you to keep in touch with us and to get updates every quarter on the entitlements and the potential exits. A little bit of background on our fundraising efforts over the last 4 years now, because we're getting at the end of 2025. If you compare 2024 to 2025, we actually are close to doubling the efforts. So this gives you a clear indicator of how investors are getting involved in our project and the trust they are giving us, because at the end of the day, investing in whatever asset class, there is a percentage of trust in terms of making sure that the team behind it is actually knowledgeable to go and execute. A little bit of sold projects. There's a full data room that you can access by clicking directly on the brochure, where you can also see all the projects that we have currently under management. The 2 deals that you see on the left, these were full entitlement deals. One in Yuma, Arizona, where we did a 100 room hotel entitlement deal and sold it to a chain of hotels. Bowie, Texas is very similar to the one I'm presenting today. It was a subdivision of 34 lots that we sold to a developer builder. It was in Texarkana, to be exact. That city, I believe, is only 100,000 people. Here we're talking about 200,000 people. So we're expecting a little bit more developers that would be interested in that specific parcel. And then the 2 deals on the right, these were very specific land flips where we acquired at a discount and just put it right back on the market. Today, LandQuire is obviously focusing on entitlement because this is really where we see the biggest upside in terms of ROI. And that's why I'm presenting our latest portfolio today. Our current projects in Texas, I think it's important for you to understand our footprint there. Obviously, you will see that we have roughly 6 projects in the San Antonio area. We have one that is in Abilene, Texas, which is a city where there's a big data center being built. But very similar, we finished actually the entitlement on the deal here in Abilene. We're finishing the entitlements on portfolio 11 and 12 in the next 60 days. Portfolio 13, we are already under contract to sell to a large national developer. Portfolio 15, we closed on it 2 weeks ago. We're doing 500 lots for a mobile home park as well. So the entitlements are, halfway through. Portfolio 14, it's a single family residence subdivision that we are submitting plans in January. And 17 is one that we are acquiring on December 18. And obviously, the last one, portfolio 18, on which we are starting the raise this week and next week. A little bit more details about all these projects. If you wanna take the time once you receive the brochure, feel free to ask us questions on these specific deals, so you can get yourself familiarized in terms of how do we manage the project management of these entitlements and what is the right expectations in terms of the disposition phase. The investment process is very similar for every investor. We have a full project monitoring. We have a legal monitoring to help you create a personal LLC, a C Corp, depending if you want to do a trust, if you want to invest personally from offshore. There's obviously different ways that you can invest into the SPV that owns the land, but we will be happy to have a full meeting, personalized meeting with our CPA and your accountant as well to make sure they're on the same page. So again, a little bit more pictures about the golf course that is right next to us, the high school as well that was built recently, and the pre-conceptual that is currently at 299 lots. Again, this is V1, version 1 of the model. There's, I believe, 310 lots, but we have to take into account a detention pond and some space for amenities. Again, it's very, very important for new mobile home parks to actually do amenities. This is really what will be driving the interest from builders by making sure we already engineered the pool, the clubhouse, some sports courts, and some green space. Some sales of comparable land and other for sale. So if you go on this website and you click on the link, you will see that most of the parcels are for sale anywhere between 35,000 per acre up to 75,000 per acre. We got our parcel, the 40 acre, at $31,000 per acre, flat, good access, sewer and water in place. So obviously for people that are already land investors, you must be aware that when you have water and sewer, it saves you a lot on offsite construction. And when you have a flat property, there's no leveling to be done or minimal leveling to be done. So removing dirt will not be an issue, besides obviously building the detention pond. Some of the current mobile home parks that are in the area, there's obviously different kind of pricing. Most mobile home park in Brownsville are 1980s, 1990s mobile home park with minimal amenities. The real only one that has a state-of-the-art mobile home park is really our neighbor, Riverbend Resort. We did a full market research that I will show you in the data room, so you have an idea of what we are up against. Again, I am not aware of any mobile home park being entitled at the moment in Brownsville. So the goal is to come up with a brand new product at the end of 2026 for a builder to take it on and start cash flowing from it. The project timeline, very standard in any land investment. We will have obviously a fundraising period over the next 30 days. We will have the closing that will happen anywhere between January to March. Again, we're shooting for January, but we're always safe by saying March, because sometimes there is some title issues to be resolved. Sometimes there is some feasibility issues that needs to be resolved before closing. But you, as an investor, we're talking about the smallest raise that we've done this year. So if you want to have a chance to be part of this raise, again, feel free to reach out, and we'll be keeping you in touch in terms of timeline to make sure that you can have a spot and join this project. A lot of our investors also diversify several $100,000 in different projects. That's a strategy that I would also recommend if you want to mitigate the risk in terms of the location, the asset class, and obviously different financial models. After that, we will be having obviously 12 months of full entitlement. This is really a weekly meeting with our engineering team that is on my calendar. The calls are really detailed to make sure that the engineering team and land planners are not falling behind the ball. It's like attorneys. If you don't tell them what to do and when and how, you can quickly fall behind the ball in terms of entitlement, and then it causes problem in terms of the exit. So the weekly meeting is very important to us, and that's a fully turnkey service that is included in the raise. The resale project obviously will happen after we finish the entitlement. We try to have an offering memorandum presented to builders and developers off market before that, but most investors, developers, builders are always waiting for the construction bids, the proper documents to know how much it's going to cost to build in order to understand how much they can pay for the land. So just to give you a rough idea, a stabilized lot at $650 per month will be worth anywhere between $80,000 to $90,000. So we need to make sure that the builder has some margin in building these lots. Again, at $18,000 per lot for the exit for us, plus roughly $30,000 of construction, the builder should be below $50,000 per lot in order to get $600 to $650 a month in rent. So the NOI is really good for a builder, and that's why we're invested in this niche market. A little bit about the financials. So 1.268 for the land acquisition, $75,000 for the carry costs, pre-acquisition expense, which include the full feasibility study, the sourcing, the deposit, and all commissions on acquisition is $664,000. And then after that, once we close the land, we have to spend on land planning $682,000, which puts the total project at $2.69 million. At $2.69 million, obviously, the goal for you as an investor that bought shares is to have the land valued and appraised at $5.3 million a year from now. And the way we do that is obviously by doing the full entitlement and by recording the new plats, by having the actual 299 having a valuation at $18,000 per lot pre-construction, we get to $5.3 million in value. Now, after that, we have to take out the which if the deal makes 90%, how much am I making? Well, as an investor, you get first your 10% pref return, and then you get your profit distribution. And in terms of numbers, we added you on the pro forma a very simple sheet here that tells you based on how much you invest, how much profit split you get. If you put $1 million, you get 10% pref plus 70% of the profit. If you put 500, you get 65% of the profit. If you get 200, if you put 250, 60%, and if you only put $100,000, you get 55% of the profit. So if we sell in 2 years, for someone that put $100,000, we're looking at 59% ROI pre-tax. Again, you would have to take into account based on your personal tax situation, how much you would be taxed. Because again, this is a transparent LLC. We distribute all the proceeds at closing, and every shareholder pay their taxes based on whether they're invested on an LLC or a C Corp or if they invested with an offshore entity. At the end of the day, we are happy to do a CPA call to calculate exactly what would be the net in your pocket after paying Uncle Sam. So that's it for me in terms of the presentation. I like to be quick and precise. In terms of the data room, let me go back on the data room. I want to show you very briefly what does it look like. So we have the contracts that we signed with the seller. There's a deposit already in place. It's a binding contract. There's no need for you to try to go around us and try to get the land. You won't be able to do so. We also have a zoning map that shows you the zoning laws to explain you that we are already on the residential side. Then we have a full market study on all the parks that are around to give you an idea about how much cash flow could a builder generate once he built the park. And basically, you can discount the construction costs, which are roughly $30,000 for that specific market. In Texas, we might be a little bit lower because Brownsville will have a workforce that is a little bit lower than north of Texas. But based on our experience is that if you include road, utilities, amenities, and obviously the GC and the subcontractors, you're looking at roughly $30,000 construction per lot, plus the land cost, which is $18,000. So you get just below $50,000 in total investment for a builder, which then will be trying to stabilize the lots and then refinance them anywhere between $80,000 to $90,000 based on a 6% cap rate, depending obviously on the interest rate, 2 or 3 years from now. We also have a feasibility study that was done by the seller. We have the pre-conceptual and we have the full financial model. So that's a pretty complete data room, especially on a project like this one. On top of that, you also have the Google map. So let me show you a little bit about the area, because at least you know exactly where the property located. So we're just on the path of development of the city of New Brownsville. Fun fact, this is the second property that I'm buying on the border between Mexico and the US. The first one, we sold it already and made a great profit. I'm happy to share the information with you. And this one, we're obviously 10 minutes away from Brownsville Port. All the hospitals, malls, museums, schools, everything is located within 10 minutes as well. Everything here is being built as subdivisions. And the fact that we are able to acquire this one off market at $31,000 per acre is really where we make money. We don't make money 2 3 years from now. We make money when we buy, like any other real estate investor for the most part. So feel free to take a look at it. And if you want to go on ground as well, we're happy to schedule a meeting with one of our investor relation director to travel with you and take the time to visit some of our properties in Texas, not just this one, but also the other ones, especially for people that have larger budget and want to diversify in several projects. We have a couple investors that have $2-3 million and they want to diversify $200,000-300,000 in each project. That's definitely doable. Our goal for 2026 as a company is to present one deal at least every 60 days. If we can have a deal every 30 days, that would be great. That will be depending on obviously acquisition pipeline and the capital raise efforts that we generate. But yeah, lots of different opportunities to come in 2026. But here, the beauty about this project as a whole is that there's no leverage, there's no debt. The land will be acquired outright. We have water and sewer. The what's called the topography is flat, and this is really what we're looking for. All right, so that's the Google map. The construction plans, that's the pre-conceptual for now, and the task planner. So the task planner will be built over the next coming weeks, but it looks something like this. As an investor, you will be giving access to our project management tool, so you can follow along the entitlements. So these are all the steps, for example, for a project that we're doing in Texas as well, to give you an idea. So these are our steps that are worked on by our in-house project manager, Willem, head of entitlement, and the team of engineers that are lga.com. So that's pretty much it, guys. Thank you for listening to this presentation. I'm going to take on questions. I love answering questions. I don't know if anyone has questions. Let me see. Coming back here on the, I'm not seeing. Joe, hey, good evening. Sophie, good evening. Henry, hello. Pierre-Lou, hello. Isabel, is the local municipality supporting of MH developments? Yes, they are. And again, we will have another conversation with them, because we need to have a formal pre-application meeting where they basically receive all our documents and give us feedback before we acquire the land. But so far, so good. There's no zoning laws that would not allow us to do so. If we had to do a rezoning, I would be a little bit more concerned, but here we don't. Here it's a matter of talking to them in terms of, is there enough water? Is there enough sewer? Is there any specific fire flow details that we're not aware of? What is the size of the lots that you would be agreeing? Right now, our pre-conceptual are lots varying between 1,400 to 1,600 square feet, but we will be adding some RVs as well. So it's a conversation with the county and the city to make sure that we're not missing anything. But typically, our engineers, once they send us the pre-conceptual, they already read the zoning laws, and that's the most important. But we always follow up with a pre-application meeting, which is really important as well. On top of doing the water studies, is there enough water? Water is obviously becoming a problem anywhere in Texas. So we have to make sure we have the water rights. Is there enough sewer? Because if there's not enough sewer, we would have to do a commercial septic. And if you do a commercial septic, then you lose some space in terms of density. So these are things that we're asking ourselves constantly before we're closing, before we actually put your investor capital at use. Is the investment structured through a standard LLC? Correct. This is a standard transparent LLC, so limited liability company. The land will be insured. The title will be insured. So that's the most important. And Isabel is asking, what happens if the entitlement takes longer than expected? So this is always a risk when you invest in entitlement. We cannot guarantee exactly the time zone, the time frame of entitlement. And this is why you have to study our track record. You have to study typically how long LandQuire takes to do entitlement in Texas in general, but then how long do you think as an investor we will take based on the conversation we have together? I really emphasize that you want to do as much research as you can as an investor. You don't want to trust anything for granted regarding what I say. You want to verify everything. I'm just giving you the information I have, and then the most important is that we have a conversation to see if this is a project that could fit your potential risk assessments. Henry O'Connor, why mobile home more than RV parks? So here again, we're finishing a market study to kind of help us decide how much MH we're going to do versus RV. Mobile home on one side gives you the ability to have steady cash flow, because typically people live there the whole year, versus RV, which is a little bit more seasonal. So you have a little bit more management, but you typically have a little bit more income potential, because people are paying, sometimes $50, sometimes $60 per night to stay on the park. So if you only rent 10 nights out of the 30 days, that's already $600, which is what you would generate on the MH side. So then it's trying to maximize our market study to do the perfect analysis and give that on a silver plate to a developer builder. That's the most important thing. If an investor spreads risks over multiple projects, then the profit share for each one is. So yes, so every project is based on how much you invest. So here, if you put $100,000, you get 10% pref and 55% of the profit. Now, Tony, sometime if people take an entire project by themselves, we do what's called joint ventures, where you come in as a co-GP instead of an LP. Some people don't want to be part of other investors. They want their own deal, and that's totally doable as well. And then we could negotiate basically different terms. But in terms of making sure we have a proper system in place, this is the terms that would be applied for this deal, because we have legal documents that comes out on the data room, and these legal documents, once they are done by the attorneys, we cannot change them. We cannot change the terms. We cannot change how we structure the investment. So I hope that answered your question, Tony. Tony is also asking, okay, less than one single large investment. Yeah, so each specific project has a set of rules, and based on that, and based on how much you invest, you would be in a different bracket of profit split in between LandQuire and investors. Again, the reason why we put a 10% pref return for investors is really helping you as an investor, because the longer LandQuire takes to sell the land, the less LandQuire makes on the back end. There's also one clause in the contract that says that if we do not sell the land within 60 months, you get 100% of the proceeds. We come from a basic understanding that if we're struggling to sell the land, then we should not make a profit on it. We should just give you 100% of the profits after 60 months, and then hope that we can continue on other deals together. But again, we know that real estate is full of market cycles, and it's really hard to know in which market cycle we are. What I know right now is that I'm acquiring a piece of land with my investors at a discount, that I'm going to force the appreciation that gives you the maximum potential to actually sell at a discount, sell at the right price to a developer, sorry. Can I invest in any other currency? So if you do have other currencies, you can, but once you do your wire transfer, you would have your currency transferred in US dollar. Obviously, we only deal with US dollar on US bank accounts. So you would have to talk to your bank and understanding what would be the exchange rate that the bank would give you based on the amount that you invest. And I would even give you as an advice to look on the other platforms that are foreign exchange platforms to see what kind of quotation they would give you. I know some of my investors use Wise. There's a couple of platforms online you can use to have the best foreign exchange rate. Are there any nationalities that cannot invest? I believe there is a list of countries that we cannot take. So I don't have the list of the countries right now with me. But based on your country of residency, please feel free to communicate with me or my investor relation directors or my partner Thibaut, and we will be able to tell you based on your residency whether or not you can be part of this capital raise under a Reg S. Joydeep, Roman, I presume you're not developing the MP. You're just doing a land entitlement instance. To do development, you would have to raise 9 million, 30,000 times. Correct, Joydeep. You're absolutely correct. The goal here is to have an SPV that acquire the land, do the entitlement, and then exit the property. I do have LandQuire, which is our construction brand, that would be interested to buying the land at $18,000 a year or a year and a half from now, but I cannot guarantee it in terms of timing because it will depend on the capital raise that we do. Again, the reason why we're acquiring these lots is that we're also interested to acquire it down the line with our construction brand to take it on the next step, where we will have to raise an extra $30,000 per lot for construction on top of the $18,000 for the land. Now, we will not be waiting for LandQuire to buy the land. We will be putting it on the market with a real estate licensed broker, dealer, and try to find the best offer. At the end of the day, we will be, as a fiduciary, taking the best offer for the LPs that invest in that specific special purpose built entity. So I hope that answers your question, Jodeep. You're really investing on a land entitlement flip system versus a land construction model. We do have a different land construction model. Right now we're raising one in Abilene, Texas, where now the risk is not on entitlement, the risk is on construction, but the upside is also on construction versus entitlement. There's different risk versus different upside based on what supply chain of the land cycle you like to invest. Some investors like to invest in construction. Some investors are like, oh no, I don't like construction. I'd rather just do the permits and then we sell it and then we reinvest in another one. We have over 400 investors, and I can tell you there's 400 opinions on that. So I'm happy to try to dig into your potential strategy and tell you my opinion and see what you should be doing. Jack, what risks are there of a project not being completed? And if not completed, then what does that mean for the client invested capital? Is there any capital protection? So this is a great question. Let me try to answer that quickly and in order. As a real estate investor, when you are on the equity side, meaning you're buying shares into an entity as a partner, you either invest with leverage or without leverage. As soon as you put leverage, you have a lender that could potentially take away the parcel from you if you do not pay the debts on time based on the terms that you negotiated. So what I want to explain here is we do not have leverage. We do not have anyone besides the county, if we don't pay our taxes, that will be able to take our parcels out from us. And that's the honest truth on this property. Unless we put leverage, there's no one can take the parcel away from us besides the county if you don't pay your taxes. Now, what if the project don't get completed? I think the question is wrong. I think the question is, the beauty about Texas in general is that it's not about whether we're going to get entitled or not, because we know it's already residential zoned. It's more of a matter of figuring how many lots we're going to get and what will be the land value once we finish the entitlement. The entitlement, we're going to do it. We're going to do it. We're going to crack at it with the county and basically propose them what we want. And again, you always have a risk that the county says, well, I don't like this, I don't like that. You have to reduce density. But again, if you reduce density, that means you do have a bigger lots. So bigger lots would sell at a higher price if you do have bigger lots. Now you can lose a little bit of value on the overall 5.3 million, which is our target exit. But my guess is that we wouldn't be losing capital because we would at least be able to sell for what we bought the land for, knowing that we are in a county that has pretty strong demographic growth. That's also why we're also investing in land, is that the time is with us, not against us. So yes, there is a risk on timeline in terms of entitlement. You never know exactly are you gonna finish it in 9 months? Are you gonna finish it in 15 months? What I can tell you is that my experience on the last 7 projects that I did in Texas is that the longest I've got, I believe, was 15 months. The quickest I got was 9 months. But it doesn't mean that you have to wait for the finishing of the entitlement to start marketing your parcel. You can already start marketing it. Doesn't mean you're going to close on it, because typically the builders are waiting for the construction costs. But it's just to give you that we're working on the disposition and the entitlement at the same time, and trying to find the right buyer. So that's the upside. We have an upside where we can force the appreciation. Now, land is obviously much more illiquid than any other asset class, I would say, but it's also the asset where you can buy at a steep discount and force the appreciation. You cannot go tomorrow and buy an apartment building and double in 1 year the value. because that's what we're looking to do here. Your shares in 1 year, the goal is to have them valued at 90% more than what we already invested a year before. And you're not able to do that in other, I'm sorry, but in multifamily, commercial, if you buy Bitcoin, if you buy diamonds, if you buy gold, you have to wait for the most part for the market to come up. Here, we have an active legal work with land planners that allow us to transform the product, to transform the land into something that is actually bringing value to a developer. And that's the beauty about investing in land entitlement, specifically in the US. I've got a lot of friends that do it in other countries, and I'm sorry, but I think the US is the best country to do it because it's pro-business and there's a clear guideline in place with the zoning laws established by the city or the county, which is not the case in a lot of countries. I'm sorry, but I've got friends in the UK. It takes them maybe 5 years to do entitlement. I've got friends in France. I've got friends in Latin America. It's really hard to actually get entitlement done in 9 to 12 months unless you're in Texas. So I hope that answers a little bit your question, Jack. I guess, the last question that you have, is there any capital protection? The capital protection is the land that you have. That's the collateral. That's making sure that you have a true asset that you can go on and touch and feel and grab versus all these, other investments where you don't really know what's the collateral and how much the collateral is worth. What I like about land is that it's much less volatile than any other asset. It on average takes anywhere between 7 to 8% if you're buying properly around the path of development of big cities. And that's what I love about land. I can talk about it for hours. I'm passionate about it, but that's the true opinion. How quickly are you finding it to sell the land property in order to realize the gain? So typically, obviously, we'll send it to 10 to 15 builders to start off market to a VIP list that we establish with our disposition manager. And then if no one comes to the price that we want, then we just list it on the market. And then it takes anywhere between 6 to 12 months on average to find someone that actually have the right financing in place, the proof of funds. And again, it's typically 6 months of due diligence for this kind of parcels and another 3 months for closing. But again, what I've seen over the last 5 years is that typically the first offer that you receive is, for the most part, the best. Even though you're not getting sometimes the offer that you want, sometimes it's better to take a little bit of a haircut rather than holding on something that don't need to be held. The goal here is to have velocity on the capital of our investors, because LandQuire also lose 10% per year if we take too much time to sell it. So we lose our margin if we don't sell it quick. That's why it's good for you as an investor that LandQuire is incentivized to sell quick. The last parcel that I sold, entitled in Texas, was in 30 months. So just to give you an idea, 30 months. It took 30 months. All in, between the time we receive wires from investors to the time that they receive wires after we send the distribution letters. Jack says, yes, but I mean, what happens if it doesn't sell or if there's any major delays? Does the investor get his money back, or is it a case of waiting? So technically, you could sell your shares anytime you want. If for some reason, 2 to 3 years from now, you're like, okay, well, I need my cash back. Well, you will have the right to go and find another investors and sell your shares. You just have to offer your shares first to the fiduciary, which is the general partner, LandQuire. But if we don't make you an offer that makes sense for you, then you can sell your shares on the secondary market and move on with your life. Again, there's no reason for me to tell you to invest if you're not willing to wait for the exit, because the full gains are realized once you actually find the builder that pays for the full value of the land. But I do sometimes, out of the 400 investors, maybe I had like 3 times where I had investors that say, hey, listen, I need cash. I need to get out. Can you help me? I say, well, yes or no. And if it's no, then you can find on your own an investor, and you would have to maybe sell at a little bit of discount. The beauty is that a year from now, we will have an appraisal done, which basically have an update on the value of your shares in the SPV that own the land. So that's also, a good timeline. If entitlement takes a year, then in a year we technically have the company that owns the land that is worth more than what we already invested a year before. So that's a little bit of my process. If you have other questions on how you can find liquidity, if you want to find liquidity before we send the land, I'm happy to answer that as well. Yeah, so you're talking about major delays. Yeah, we talked about that. And I think we're getting to the last question. Okay. Well, it's been 57 minutes we've been together. We had an hour, so great. I really appreciate everyone to take the time today. I want to thank my team again for the day in, day out work that you guys are putting in order to make this possible for our network of investors. We have crazy goals to become the #1 land investment firm in the US over the next coming years. And I hope we will get there. It's a big and bold goal, and there's a lot to be done in between. But if you do believe in our product, I'm happy to have a follow-up call with you and answer any questions. Thank you, everyone. Talk to you soon, and have a great evening for people in Europe. Have a great afternoon for people in the US. Bye-bye.